You know what? This is actually a very good example on this daily chart of what could be a good breakout. You have something that's been in an uptrend, made a high, and then you can see that it pulled back. And during this pullback, what you're getting is these higher lows. This is precisely what I like to see. Higher lows leading up to the resistance. And then when it breaks a resistance for a breakout trade, that's your entry zone. The stop a little below it in this thing going long. This is precisely how I'm trading these days with the futures market, with all of them, really. I'm just looking for this. Just look for a particular resistance or support, the other way around. And then the pullback, and you're waiting for basically the price to get closer and closer and closer. In this case, the buyers are taking over. And buyers taking over, you're not looking at the tops of the candles, you're actually looking at the bottoms. You're looking at these higher lows. Buyers are buying at higher and higher prices. And if they happen to break the resistance right there, that's your trigger for an entry. Very simple. I'm doing this on a 30-minute chart on most things. And the stop below, and then you go, you measure your move, or you have a target overhead. It's a very simple way to trade. You don't need much else. I mean, if you have just one strategy and you just do this, you just look for this kind of setup on a 30-minute or a daily even. I think a 30 makes more sense for the day trading perspective. You don't need to do a lot more. You can just look at the few tickers, 5 or 6, and if one of them sets up, that's it. Easy enough to go. And that's actually precisely the strategy I'm working on. Now in this, you're not using any predefined levels, right? The levels are just defined by the most recent resistance or support. So I think it's a simple way to go. See if we can find any other instances of this sort of thing. Again, I've been looking at the futures market, so.
MU could be also a good example on that, Avi, which is on the same sector and has been following the same kind of trend.
Okay, yeah, let's look at MU then. Yeah, there you go. You have it. I can see it right here. So you have that obvious resistance, right? And then you're getting these higher lows. And in this case, did it make a new high? Yeah, it did make a new high. Well, it's a daily chart. If you enter here, you have a stop out. And then you'd re-enter when it, again, breaks the high over here again with higher lows. And stop a little below it, and you're in this thing. This is a daily chart thing. For sure, yeah, good catch on this. Let's go for more of a smaller perspective out. We don't get the pre-market price action with this. Let's just go the daily. Anyways, it's the same thing. I'm doing the same kind of setup on a 30-minute charts. Of course, I'm looking at all the candles, even when the market's closed. But yeah, good catch. It's right there. So this particular one would have happened on the 19th of December.
Almost a $20 move from the opening, and we're just 15 minutes there from the 400.
Where are you looking? An MU?
SNDK.
Okay,
because now is around 380. Let's see.
Yeah, that makes sense. Good. Pay attention to it. You got something. You got something on the move. That's good.
Thank you, Alan. Thank you.
Sure. Yeah, this is all very interesting. I was doing the silver trade earlier. I'm still in it. Let me see. Yeah, still in it. Bring it out here and see what it's doing. Futures. Getting up to the target. My target's 89. On the daily chart, you can see where it's done the same kind of setup. Put in resistance right there. Higher lows, and you catch the breakout. Just enter the breakout, stop a little below it. I did it on the 30. Let's see if we can get that. Yeah, we can get it. Okay, there we go. Yep, that's the resistance I worked with. Then I put in another one here. I got it right here as it broke this one. So the top of this red candle is where I entered the stop below this big white candle, green candle. And then it moved in, and the stop's at break even now. Again, higher lows, key point, higher lows leading up to a firm resistance. Good, clean breakout. So as far as technical price action is concerned, this is what you want to see for a breakout. The other couple of things that make sense, if you like to look at such things, is there a catalyst? Ideally, you get a catalyst, and that tends to make things break out. And that's usually accompanied by a lot of volume, elevated volume. So those are other indicators you can use as well. Put them all together, and you get into some interesting situations. And you can do the same thing on a 1-minute chart. I did this for years on a 1-minute chart. You guys saw that. But again, the 1 minute is the 1 minute, it's small. You're not going to catch massive stuff, small stuff. So I'm just focused in on the 30-minute for now. Anyways, anyone got anything else you want to look at? Other tickers? WDC, so you're looking at Apple, similar. Alcus, you're on fire today. Let's look at Apple here. Let's see what we got. I have not looked at this in a long time. 30-minute action, again, without the pre-market activity. Yeah, well, it's been in a drop, hasn't it? Let me pull back up. On a 30-minute chart, just looking at this, I'd be careful with it because of the chop. Just look to the left, and you can see it's a lot of chop, right? It's not an area I'd like to play with. Once it breaks out, well, you got all these areas, but the most recent chop is right here. Breakout from this area, basically pre-market high zone. That would be fun. Or the low, kind of go down below there. But again, look to the left and you see chop. Just don't play with it. Nice and easy, right? WDC and Oliver, you're in gold. Nice. All right, let's look at WDC and then we'll go to gold. What is WDC? Western Digital Corporation. Okay.
Also, NDC was the spin-off that they did when it's a company of WDC, because they're all in the same space with the storage of the AI and so
on. Okay. Yeah, so it'll be heavily in play, of course. You can see it's been putting in a lot of moves. Again, with the breakout idea that we were just discussing, and this is, again, looking at 30-minute candles without the pre-market activity, post and pre-market, you have this obvious resistance right here, this zone. And it got to it with these higher lows. And if your entry's in this area, you may have taken one stop, and then you re-enter, and you're into this and got your target over there. So it's a tricky one, but it's there, breakout, basically. Today, yeah.
Exactly, Avi. After it breaks the resistance that it had found before, this 202 level, you see like it has a lot of volume as well, and then it supports it after until again it finds a new resistance.
Yeah, that's the volume area basically, and you kind of know the volume's gonna be there.
Exactly.
That's where the battle takes place. That's where it's the fight between buyers and sellers, and before the battle even begins, you have a good, clear indication that the buyers are in charge. They're likely to win and go. But then the real confirmation is that it breaks and it prints higher. So up in this area. So my whole thing is in these situations, buy high and sell higher rather than trying to buy low and sell high and getting into all kinds of mess. Just take it easy. Wait for confirmation. Your win rate increases so much when you wait for confirmation. I can't even tell you. It's amazing. Just the new high or the new low. Just that. It's amazing. Oliver, you're looking at gold. Let's look at that. I'm interested in the gold thing. And I've discovered that these commodities are really fun to trade for my time zone. Much more than the ES and the NQs. That works more than the New York time zone. Just what I've been observing lately. So gold, yeah, been on the move. Again, 30-minute chart. This is a bit of a flat bottom. You got that resistance overhead. If the buyers are in charge. Let's see if it breaks. What would be truly ideal is a ascending wedge consolidation right below that resistance, right here. Then the new high, and I'll take that one. Go long from there. I don't see a short in it. I mean, it could go short, but not the way I like. This is a reversal setup, kind of, sort of. Not really great. You have this long tail hammer, and sure enough, it worked. It's not ideal. Cool. Fun.
Avi, in this case on gold, how could you? I think it's the profile, volume profile, or the volume that will show whether it's gonna be a breakout or a reversal, or kind of if it's gonna be a double top or a reversal, or if it's gonna be a breakout. Like, how would you judge it? Would you wait a bit for, let's say, the next 30 minutes until you see that it can break the level with authority before you enter?
Yeah, that's one way to go if you're looking at this sort of thing with the resistances here, and you wait for a candle to close firmly above a firmly bullish candle and then go. That's one way to do it. But the thing is, I'm doing this on a 30-minute chart. I'm not genuinely waiting for that candle to close. By the time I see it break on a 30-minute chart and it sits up there for a little while, it's probably 5 or 6 minutes past, in which case you've most likely got quite a few 1-minute candles already closed up there. That's enough for me. So I can already know all that just by looking at a 30-minute candle. On a 1-minute chart, yes, wait for the 1-minute candle definitely to close above and pull back and retest and bounce off, because these are 1-minute candles, right? You don't want to jump in. You just want to be careful.
Exactly. And
So
how would you evaluate if you would like, let's say, to keep a part of it? Let's say we're not only doing the day trading, but you're doing, let's say, 80-20 positioning, and you want to keep it just a part in case you want to hold it longer. How would you evaluate it?
yeah, see, that's something I've never done. I really don't want to do much of that because I'm looking at the 24-hour market. But if I was to do that, the things I would consider are, what's the overnight risk on these things? So we know they're heavily in play. What's the news coming out? Is there earnings coming out? What's the state of that industry sector? All of those sorts of calculations. Then you start looking at PE ratios. You go more into fundamental analysis and then see if it's worth holding.
Okay, makes sense.
Yeah, monthly chart, look for resistance levels overhead, things like that. So if you want to do all that, sure, but to me, it's just not worth the time. I just rather get into a heavy position, do it right, while I'm watching it, or during the market open hours and do it. That's how I've always done these things, especially with options. And
super. Thank you, Avi. Thank you. Amazing. Yeah. Thank you. I totally get what you mean. Plus the peace of mind that you have while you sleep.
Yeah, that's right. That's right. Absolutely. But you guys saw earlier today, right? Just a half hour ago or whatever it was, the platform wouldn't let me open it, right? But it's okay. I'm awake. I can watch it on the phone, and I see the silver position. It hit the target, and that's it. The trade is closed. I don't have to do anything. It was already set, limit order. But if that was still open and the platform crashed and had this heavy open position, and I'm not sure if the limit order is going to hit or what, and I'm asleep, and then I know the market's going to close, and oh man, it's going to get messy. While I'm awake, at least I can monitor it on the phone, if not actively manage it, but every few minutes or every half an hour, take a look at it. That sort of thing. Yeah. The other side is investing, which is you put it on and you leave it for 5 years. You don't check on it. It's something else completely. Anyways. So Oliver, are you into this? Gold, GC, or MGC? No, I saw, oh yeah, this breakout thing that I've been working on. I'll show you guys something else. I saw it here, yes, on gold. I saw this a few days ago. You can see that again, firm resistance over here. Made a move up, firm resistance, push down, then these higher lows. And the market closed for that 1 hour that it closes, the futures market. But it opened up here. You can see the open of this candle. Pull down, push back up. Now in this situation, I would just wait for it to pull down, push back up, and when it pushes back up to its open, it's printing again above that resistance right there. So once it reclaims its own opening price and it's printing up in this area would be my entry, somewhere there, the stop below and go. For me, that's about 2 a.m. or so, so I wasn't watching it. But this setup is the same thing. It's exactly the same thing. Again, breakouts are very, very simple trades. You can get them all the time. Here, I'll show you something that's quite the opposite. This is interesting. This thing's been in a downtrend and then reverse, right? You have that big hammer, that nice reversal signal. You could have got this. Yeah, great. But you had the same thing here. You would have stopped out. Same thing here. You would have stopped out. Probably had the same thing right here. You would have stopped out. And none of them are illegitimate setups, according to the way I like to trade reversal. All of them are there. It just takes 4 or 5 stop outs before you get the one to work. But that's the hard part, right? You got to take a lot of stop outs when you're trying to catch reversals. That's just how it is. They're trickier to catch. The simpler way with call it a better win rate and less heartache is the breakout setup. So a couple of different things. Then there's basically 2 ways. There's 2 things the market does. It goes sideways or it goes directional. That's it. So once it proves itself that it's directional, you catch it. And the time it goes directional is after a consolidation, right? So it's two phases. It goes back and forth. It's either consolidating or going directional. Here you have the consolidation, then it got directional. So that's very simple to catch rather than saying it's directional and then the reverse direction. The direction immediately reverses. That's very rare that it immediately reverses. It's usually consolidation before it reverses. Over here, even you can see this is a bit of a consolidation and then it starts to go. So a way to catch this, if you like, is wait for it to break out of that resistance. So you're not catching the reversal at the hammer. You're catching the continuation of the reversal, which now you have a higher win rate. So these are just making life simple. You know, take it easy with all this stuff. Don't go chasing it around. The market will slap you if you just try and chase it. You know that. Oh, I can hardly hear myself. Ears are blocked. Ooh, keep getting sick. It sucks. But when kids go back to school, that's what it is.
Hey, Ollie. How are you?
I'm all right. I'm all right. How you doing, man? Good to see you.
Good. Just a question about the platform for futures trading, because Ninja is not available for us here in Quebec.
Mm-hmm.
Is there another platform that I can try?
Well, Ninja is two things. It's a broker and a platform. Is the brokerage not available? Can you not open an account, put money in it?
I'm not sure. I just tried to basically try to trade paper trading, and they asked for the address, and basically it's only for Ontario, and Quebec is not in there.
Oh, okay. I will check with them if the brokerage is available. Maybe the platform isn't. It would be kind of strange, but if that's the case,
would be.
yeah. And if you can open a brokerage, then you can link it to TradingView right here, which I'm looking at right now.
Are you using TradingView for trading?
No, this is just the free version of it. I've got it up right now. I'm not using it for trading. I'm using Ninja. Right now my Ninja's down. It locked me out because of incorrect password too many times or something.
Okay.
So I'll log in.
So you basically you haven't used anything else for futures?
I haven't. I have no experience with anything else. The only reason I've gone with Ninja is because of the margin, very low margin requirements. Basically, you get lots of leverage. But, you know, just look at any broker that's available to you.
Yeah.
And it should be all right as long as they allow it and they don't have ridiculous margin requirements. Like IB has very high margin requirements, so I don't want to use them. So
maybe I should just move to Ontario.
There you go. Get the hell out of Canada to begin with, man. Shit.
Oh man, don't get me started.
You could check out TradeStation or Tasty Trades.
TradeStation.
TradeStation's got pretty low commissions.
What's the other one?
Tasty Trades.
Tasty Trades. Okay.
Yeah, they do options. They do options, but they do futures too. But try TradeStation. Amp's a good broker. I think definitely Canadians can use that. AMP. That's a broker.
Okay.
Yeah. AMP. Yeah. They're a broker, and then you can use Sierra charts for charting.
Cool. Thank you very much. I'll try those.
Thanks, Oliver. There you go. Plenty of experience in the room, guys. Most things I'm telling you, don't ask me. I don't know. But everyone in here has got experience in different areas. So you can always find out. All right, here's that breakout thing happening now that we were discussing on gold. It's not ideal because these higher lows ain't quite, it's a bit messy. So the idea is to enter when it prints a new high, which it did now, and a stop below the entry candle, which is down here. So you have a very wide stop. For this to make sense for 3-to-1, it has to make an enormous move. This is a situation where I wouldn't trust it because it's not worth putting on the risk. But on the other hand, if it goes and comes back and bounces off, then you can put it on, put the entry on somewhere here, perhaps, the stop right below it, and then you have better RVR. So it's always RVR, really. In the end, you want your winners bigger than your losers. Otherwise, you're never going to make money. What else is on the move, guys? Tell me what you want to look at. We'll just start coming up with stuff otherwise. But what's good? What's working right now live? You guys are all overtrading and stuff. Let me know what you're overtrading. I haven't looked at this list in a while. This is an old portfolio I had. It's evolved since then. I was monitoring it here.
Intel, SMCI, and silver we already saw. I think Intel and SMCI are good examples.
SMCI, all right. Oh, I remember trading options on SMCI at one point, I think 2 years ago. Oh my goodness, that was madness. Yeah, clearly this thing's been on the move since the open. Let's see what the 1 minute looks like. Yeah, push down, reverse ABC, and go. So again, the breakout idea over here. So one big move down and found support right there. There's your pullback, and then it's making lower highs, right? Prints a new low. That's your entry, the way I do it. Stop above the entry candle, and you're in this thing going. The other way to do it, which is on a 1 minute chart, I'd recommend it more, is wait for it to broke out, printed a new low, and pull back and rejected the resistance. Rejected the previous low, that support. Once it rejects, then you have your retest done. Your entries in this area. So that's a much safer way to do it on a 1 minute chart. Same situation now. This prints a new low, you could get involved and stop above the entry candle. But again, 1 minute chart, I just have a little patience, 3 or 4 minutes patience. It's not gonna kill you. Wait for it. Because the 1 minute will fake you out so many times and you'll get mentally exhausted and then you'll blow up an account. That's typically the process. So please don't blow up.
AMD as well has moved a lot, Avi.
AMD, all right. Look at this. AMD feels exotic to me because it's been so long. And avoiding all these silly tickers. Yeah, I like that. Aggressive at the open, but then messy, huh? Very difficult to look at this one. All choppy. But here's the thing. Just looking at the 1 minute action. There you go. Strong first minute. Now over here, if you're looking for a 1 minute ORB setup, you could think about it, but really, with the VWAP being probably in the middle of this candle or a little lower, it's far out. It's hard to take. And then you have that second candle, really big. From here, I just wait for an ABCD, basically a 5 minute ORB. Let's see if that would have happened. And there's this thing.
It gives a second chance, though, Avi, on the 218 level, on the third candle.
Yeah, here.
Yeah, it gives a second chance there.
Yeah, you see all this stuff. I get it. I know what you mean. I used to trade this. It's so volatile and unnecessarily risky. It's fast, which makes it risky, and it's also the RVR is not heavy. It's not wild, which makes it risky because you're risking money but risking $1 to make $1, which makes no sense. And then it just gets all really choppy. Yeah, it's all just choppy. That's why I can't read this 1 minute chart anymore. I used to trade these things. But this is sort of thing where, I would have stopped out 5 times on this, trying to catch an ABCD pattern going up. So,
Avi, would you put your stop, let's say if you wanted to go long after the first minute, would you put your stop on the low of the day, on the opening, or would you put it just below the 217, let's say, or below there, yes?
Yeah, when I traded these ORBs, down here would be way too wide. Because you're not going to get it's just not going to happen, not on a 1 minute perspective. So ideally, I'd enter after the candle bounces off of VWAP, which wherever that is. If VWAP's here and it bounces off it, then I put the stop right below VWAP and basically trail the VWAP. And before I even get a chance to trail it, truthfully, I'd be ending up taking partials up here, and you end up killing the whole thing. So
exactly. 19.5 was the VWAP.
Yeah, it seems like it'll be far. I want it to be bouncing. Maybe it bounced off it here and then you go. But again, you can see how it's messy. Trading like this is not sustainable for most people. I did it, and I did it with options. It was okay, but I told you guys before, it's when I stepped away from all this stuff that I really started making enormous money. You know, everything went 10 times bigger. Just zoom out, go into other things, bigger things. This is all just a dopamine fix. Guys, all just getting excited, overexcited, over trading. So again, like I said, only amateurs trade this kind of garbage.
Absolutely. Avi, would you suggest to see it more on the 30 and then on significant levels and just, support resistance and of course price action from there?
Yeah, I suggest the 30. It's a very comfortable time frame for day trading perspective, and even for the futures market, which is 23 hours. It's a very comfortable time frame. You get plenty of moves, plenty of levels, plenty of everything. And the way I'm doing it now is I'm only looking at the 30-minute candles and not even putting levels on it. I'm just watching them move and taking these breakout positions on the futures market. It's 80-20. It's really nice and simple. And you don't have to do too much. You really don't. You saw the one trade I took today. What was it here? It was silver and ended up with, gosh, I don't even know. I'll talk it later, but probably $3,000 in profit by putting $250 down. I mean, that's leverage for you. It's crazy. Now you do that that was one contract. This is the kind of thing I'm interested to take 100 contracts. This gets really big really fast. But doing it only by looking at the 30-minute candles and not even putting levels on it, just watching where's the obvious resistance, the obvious support. You don't have to put it on your chart. You know where it is. It's right there. It's jumping out of the screen at you. Just leave it. Let it print higher than that, or break support, break resistance the right way, and you get plenty of outstanding setups. I'm looking at 6 or 7 tickers nowadays on the futures market, and I see at least one really good setup every day. At least one, which is more than you need, more than anyone needs really. So you're getting bored a lot. It's very boring. It's painfully boring, and there's no excitement in this. It's just mostly sitting and waiting, and sitting in the hot tub and looking at it. And if it sets up, then you put on the trade, and that you're still sitting in the hot tub. It's not exciting or anything, but it's very profitable. And you're not getting overexcited. That's the whole point, which is what most people are doing in the day trading world. Mostly it's entertainment. It's very few people actually make money. Mostly just entertainment by going into the 1-minute chart, trading the open, getting overexcited, all that stuff. It's just, how do you want to do it? Again, I'm speaking from experience. I've done this for long enough that I'm just about done with it.
Perfect. Couldn't agree more. Thank you, Avi. Absolutely. And it is much more calm, much more, you have the overall view, and it is also much more consistent and profitable. It's not about the adrenaline rush, it's about the RR and the reward overall at the end of the day.
Absolutely right. It's about the reward, about making money, not about excitement. You want excitement, adrenaline, there's various other things you can do. Go drive motorcycles or go windsurfing, do all that fun stuff, no problem. Adrenaline as much as you want. But,
absolutely.
Trading is a pretty serious business, man. So don't risk your money. Do it smart. Cool. Thanks for bringing that up, Alcus. Good stuff.
Thank you, Avi. Thank you.
Mm-hmm. Cool. What else, guys? What else are we going to look at today? And I'm just going to keep the screen empty and say nothing until you guys ask me to look at something.
How about MSTR?
Yeah.
It's been, it had the catalyst. It's been on play, but I didn't look at it today.
MSTR, is this right? Strategy?
Yeah.
Okay, 30-minute chart. Oh my God, this makes my eyes hurt. Whoa. What are you looking at? I don't know what to look at here. It's all garbage.
Yeah, that's really good one. I was expecting, with the BTC strength, maybe for a long above VWAP, But you see, for example, it has been consolidating there. So maybe above the 170 level could be a good one for breakout.
Yeah, exactly. Just look to the left. The prices here, look to the left. It's all choppy. And this is the top hit, this is the bottom of it. And just wait for it to get to one of these levels and then go. That's a great big mess.
Big mess. I mean, precious metals, GLD, SLV. Then we have the storage SNDK WDC MU, and AMD SMCI and NVIDIA could be, let's say, the 10 top tickers for today. I don't have something else on my radar right now.
All right. So wait for them to be in a place where there's a breakout setup, and pretty straightforward from there. There's going to be liquidity there. It goes from there. It goes nice and slow. 30-minute chart. You can put alerts on TradingView over here. Very easy. Right click on it, and where is add alert? There we go. Price crosses here. Every time it crosses, okay, there we go. Create. Now this thing's going to buzz at me later tonight. And that's it. Just put alerts on whatever you want, and when it buzzes, then look at it. Until then, you got a life to live.
My only question is, like, sometimes I don't know how it works with futures, to be honest, but I would have really liked to be able to keep part of the position for, let's say, if it is on a significant level and it's breaking out on the daily, just to keep it, sorry for the alarm, to keep it for longer, maybe for the next day or so.
Yeah, so let's look at that.
Just a small.
Yeah, MSTR here, you would look at it because of the Bitcoin thing. What was it? BTM, I believe, is Bitcoin futures. Oh man, I forget. What's the ticker? Anyone remember? Bitcoin. What is it? BTC?
Yeah.
BTC.
Oh, that's Bitcoin. No, that's Bitcoin, but what's the futures?
CME feature a BTC1.
BTC1. Okay, let's try that. I had something else here. BTC, Bitcoin futures. Okay, there we go. That'll work. There we go. Okay, so a 30-minute chart here on Bitcoin. And I'm saying there's some strength in this. So if you want to trade Bitcoin, just trade the futures. Anyways, there's more leverage in it if you understand how to use leverage rather than putting down a lot of cash and trading Bitcoin. And what you can do here again, if you're identifying resistance up here, right now there's resistance there. Put an alert. So right click on this chart here with add alert. That's it. You got an alert created. If the price gets up there, you'll get an alert. At that point, you can see if it's setting up for a breakout. And then you can catch that. And your target's up here. That's all there is. Don't have to do much else. Figure out a broker that you like to use. I'm using Ninja for now. No big deal with them. Basically, all these brokers offer futures, but they all have different margin requirements. So that's what you want to check on. But that's it. That's all you have to do. And most of these brokers, you can link them here to TradingView. Most of them don't have their own platforms. NinjaTrader does, so I'm just using it. Other than that, you can use TradingView if you really are trading slowly and you're not doing the whole dopamine thing we just discussed. TradingView is just fine. It's no big deal. It works. So that's it. Nice and easy. I think we were looking at gold earlier, right? Let's see what happened with that. Gold futures. Here we go. Okay, there. So in this case, it didn't undo the breakout because that stop would have been so wide. And let's say if we did, you wouldn't have been stopped out yet because your stop was below the entry candle. That would be down here. You'd still be surviving it. In any case, the entry was no good. The setup wasn't ideal. So no point getting involved. Wait for it. It could still set up. Let's look at the silver thing that I did. If it continued moving or what happened. My target was 89. Yeah, that's where I took it off. And that was just a measured move off of this consolidation here. So caught that little bit. And this one's a really neat setup. Very simple setup. Again, just a continuation of what it's doing. What it's doing is going up. You can see from here is there it looks like a bottom. It goes up, consolidates, goes up, consolidates. That's it. Firm push up, good consolidation. Not the one I would enter long because it's a little tricky with these higher lows. Is it there? Oh yeah, it is there. It is there. Sorry, I am seeing it. Higher lows. So the market would have closed. It would have been 2 a.m. for me, so I wouldn't have touched it. But same thing as the other one we were looking at on gold the other day. Here's the open of this candle, drops down, comes right back up, reclaims its opening price. All of this would have happened probably in 15 minutes or so. And your entry's there with a stop below it, and you let it run, go to bed. No big deal. Simple setups. Breakouts. You don't have to do too much. Here we go. Yes. Nassim Oliver got some suggestions for you with the prop firm stuff. Yeah, a lot of guys in here are doing the prop firms. Seems to be a nice low risk way of getting into it. Again, I don't know anything about this, but seems to work. Seems to be good. Saber, you want to look at the Dow? Yeah, the Dow is MYM, right? Micro Dow futures. Yes, EVD Dow. Look at that. I'm getting familiar now with these futures tickers. Whoa. What'd you do, Saber? You get short on this thing? Oh man, I can't see anything, and this is just messy. It was in this choppy zone earlier, and it dropped at the open. Now it's sitting right where there was a choppy area, so it could just get choppy here, but let's see.
Dow looks like a meta kind of ticker. It once it goes up straight. When it goes down straight.
We don't talk about meta in here, you know that, right? Oh man. Yeah, fun. And the Dow. Now meta is pretty wild. Meta meta options is insane. I can't believe I traded that for so long. But yes, I can see what Surjit's saying here. It looks like the Dow moves that way too. Doesn't do anything and then suddenly just pops. Which is all right if you're able to catch it. But there's easier ways to make money in the market than chasing this stuff around. I've got this ticker on my list over here. I've even got the euro dollar ticker, FX, the futures on that FX pair. I'm not sure if I want to keep it. Let's see. We'll see what happens. Let's see. The Dow, though, let's see. How would you have caught something like this? You catch this short. I have no setup to catch this sort of thing. On a 30-minute at least, or even this long here. Maybe here? No. There's no way. It's too risky. This short, maybe. With the support there in the lower highs. And then your entry is about there, but the stop's way up there. It's very hard to trade this. Yeah, I don't think I'd be bothered with this. I mean, there's plenty out there. And so far, like I said earlier, I'm interested in the gold, silver, and oil futures. Those markets are interesting. Then we, of course, have the ES and NQs, which seems to be more interesting during the New York hours. That's when the volume is there. Yeah, what else is there? Yeah, there's a few. Yeah, the Bitcoin one, I haven't touched it. There's a Russell, the Russell futures. Look at that. Was it RTY, I think. Oh, yeah, Russell. This is the mini, not the micro. For now, popped up and popped back. So no setup the way I see it. I may have taken a long here off the hammer, but it's not ideal. I may have taken this long here as it broke through resistance on this one. Maybe. Don't think I was watching it on this day. But again, there's so many tickers. Why would you go chasing stuff that's difficult to trade, like Meta and stuff, right? You don't have to always be exposed to the market. You can just let it go. Sometimes you're just watching 4 tickers, and sometimes you don't get a setup for a week. You come back the week later, and you get 2 or 3 setups every day, and that's plenty. Whether you want to lose money or make money, that's plenty. Either way, it's more than you need. So, anyways, there you go. Gold. All right, guys, we got the webinar this Thursday. We got Jill in our group. He's going to be talking to us about investing and how he does all that. He's got a lot of experience, like 30 years of experience with this. So it's going to be giving us a webinar. Don't miss that one, okay? It's going to be fun. Fun. I've spoken to him a few times, and yeah, he really knows what he's doing. So yeah. After we make all our money with all this trading, then you got to do something with it other than buying stupid Lambos, right? Invest it, multiply it. Lambos are not going to do that for you, I promise.
I think you call that the magic of compounding interest.
Yes, somebody a long time ago said that, right? Yes, thank you.
That is a game changer.
Absolutely. Thank you. Yes, compounding interest, and the earlier you start, the more powerful you are with it. It's amazing. It's truly amazing.
I don't know if people are hip to this, Avi, but like I also have a Robinhood account for some long-term stuff. You could park your cash there, and you'll get 3.25%, 3.75% interest just on your unused cash sitting there. in addition to the dividends that come in, I mean, it's just amazing. So wow, yeah.
Yeah, there you go. See, guys, there's plenty you can do with cash, rather than throwing it away. Of course, put cash away for your expenses, pay your bills and all that. But be smart about what you don't have to use. There you go. Evo just got an idea there with Robinhood. I don't think that's going to beat inflation, real inflation, but at least it's something. If you have no clue what to do, at least that's something. And that works. I did that for a long time. I had a Robinhood account. I used to manage my long-term portfolio in there. That's when I started out with the markets. And here's the thing. With my day trading journey, when I was learning day trading, in those first 2 years or so, just making losses all the time, maybe 3 years, I don't know. What kept funding my account, how I got to stay in the business, was with my investment. I was able to liquidate bits and pieces of the portfolio and long-term portfolio and fund my day trading account every time I blew one up. And that sustained me through the learning curve in those first 2 or 3 years. Pretty cool, huh? So if not for that, I don't think I would have made it in the trading world. And I'm not even a day trader anymore. Now I just trade these futures markets. It's hard to even call it day trading. I just kind of pro with it. But really, the power of investing and the power of compounding and all that stuff, it's very powerful stuff. Just don't be stupid with your money. It's so easy to be stupid these days with all the nonsense on the internet, all the social media buzz, all the so-called influencers telling you or influencing you what to do as if they know what you need to do. They don't even know what to do themselves. So, be smart. Mostly they're just renting a Lambo and to get 1 million likes, and then they'll tell you got to buy a Lambo. Then you go and buy a Lambo. That guy never bought a Lambo. So stupid. I mean, the garbage that goes on. You see this stuff every day, especially in the day trading world. So be smart. All right. Anything else you'd like to discuss? Anyone got anything on you?
Avi, can I ask one quick question?
Yeah.
For the 30 minutes time frame, when you're looking at it, let's say on silver or on a higher time frame, when you want to decide about the your exit rules in general, do you switch to lower time frame or do you keep it on the 30?
I keep it on the 30. So for example, if I was to catch this long here, I would target this area for the major partial. I'd take off 80% of the position right there. Because you can see, just look to the left and there's resistance right there.
Yeah.
So that's one very simple way, just looking to the left. But I'll show you something else.
And the 7.5 will be in this case sorry, I cannot see the 2.5 would be in this case your stop, or you would put it just a bit below?
The stop, I usually just put it right below the entry candle.
Just below.
Candle better be small when I enter it, ideally, otherwise it can't enter. So Yeah, that's how I do it. Very simple. Just look to the left and you find it. So over here, if you're able to catch this little breakout, looking to the left, that's your resistance zone. So that's where you put your target. In this one I caught today, there's nothing to the left. There's nothing up there. So what it is, just use a measured move. So you have the top here and the bottom here. So measure that distance. Be a little conservative, and that it put me, I think, about here 89.30 or something. Actually, look at that, just got there. I put the target at 89, just a little conservative, just a measured move, and that's it. Just leave it.
It's a measured move of $2 exactly. Let's say, because between 84 and 86, and then 86 to 88.
Yeah,
these are two measured moves.
Yeah, measured moves. It got me at about 89, but yeah, that's it. So if you don't have anything to the left, just measure it out. And that's it. So I'm not really fussed about targets. What I'm really fussed about is risk. Once I put the risk on, I want the stop ideally tight. So it should be a small candle. I put the stop right on the other side of the entry candle. And then as it goes in my favor and it's really departed the entry area, I bring the stop into break even. And that's it. Then my job is done. After that, it either stops me with no loss or it hits a target and you make money. That's all there is. I don't want to do anything more than that. I find that doing things this way is also much, much more profitable, especially on a bigger time frame, like 30-minute. I mean, people do this on the 60 even. That's more like swing trading. Let's say maybe I'll move to the 60 for the futures market. But really, that's it. You don't need much else. You just don't.
Amazing.
And with this sort of thing, I'll tell you, you can make money on a 20% win rate. Really, 10 trades and you lose 8 of them, 2 of them work. It's fine. You still make money because you're not diluting your position by taking partials and stuff. You're just letting the runners really run, and the losers are small. Very rarely do you take a full stop out because you're trailing the price. If it goes in your favor after you enter, you're trailing it, and then you bring it off to break even. But while you're trailing it, let's say you had 1 hour, and then you trail it. Now it's at half hour. Sometimes you stop out at half hour, and a lot of my trades actually in the sim, at least so far, have ended up that way. Lots of half-hour stops, lots of break even stops. And then a couple like this one that just run, and no big deal. It's very, again, stress-free, and it's very detached. You just let it go.
Makes sense. Yes, thank you, Avi. And with regards to your position sizing on your entries, do you try to go in the beginning, let's say, even with less contracts, and then by the time you see that it does a breakout, you go full size position? You wait, I mean, for a confirmation, or you have your predetermined size and you go full directly with it?
And nowadays, I'm just doing the predetermined size and just put that on. When I was doing the 1 minute chart with options, I was doing things like scaling in, and that was okay. It worked for those sorts of things. That's a different environment completely. But for this, I'm not bothered. There's no advantage to scaling in, to my opinion, with what I'm trying to do here. What I'm really doing very aggressively is trailing the price while there's risk on the table. I'm only trailing it up to the point where there's no risk, and that's it. Then I leave it at no risk. That's what I'm most interested in. Not so bothered about scaling in, not these days.
Okay, thank you, Avi. Yeah, I think the same. Sometimes just to take a confirmation, and then I always go with the predetermined size.
Yeah. There you go. It's mentally less draining, and the less work you have to do, the less drained you are, then the less stupid decisions you make. Put it that way. Especially when you're dealing with leverage products and time decay and 0DT, all that stuff. Whoa, that gets heavy. That's the reason I stepped away from all of that. It was great. I've made tons of money out of that. I don't have to take a single trade this year or next year if I don't want to. But to continue doing that is just burnout. You really do burn out. I burnt out 3 times last year. So.
Oh, wow.
Yeah.
Thank you, Avi. Thank you.
Yeah.
That was very clear. Very helpful.
No problem. Cool. All right, guys. Anyone got anything else on your minds? Anything you want to discuss before we end this one? Everyone good? Everyone know how to trade when the platform crashes?
I'm just sitting on my hands right now, so just waiting.
All right. Good. Yeah. Very smart. Very smart. Wait till the market really deserves your money. Then put risk on. So then don't. Good. All right, guys. So tomorrow we've got. Oh, hold on. Let me stop this. There we go.